All right, so let's talk about short-term investment types such as cash, T-bills, money market funds, and CDs. That's what we're going to cover in the next few videos of this series. So you typically hold cash, T-bills, money market funds, and CDs when you can't afford to put your money at major risk. So these types of investments fall into an asset class called cash. So when I say cash, yes, I do mean cash as paper money that you put in a shoebox under your bed, but I also refer to cash as short term investments like treasury bills, money market funds, and CDs. That makes up the asset class cash. So let's talk about what is actual cash. So, cash is your money that you have in your checking and savings account. It's also the physical money that you have in your pocket or hidden in your bedroom closet under a shoebox. Cash is basically your money sitting there doing nothing. Of course, cash won't physically lose value. Your dollar won't turn into 50 cents all of a sudden, kind of like a $100 stock can turn into a $50 stock overnight. But it's not going to grow either. You'll typically want to have cash available to pay for your day to day expenses, such as monthly bills, groceries, things like that. You'll also want to set aside about 3 to 6 months worth of cash in order to have an emergency fund. So let's say another pandemic hits, similar to COVID-19 in 2020, and you suddenly can't work for 3 months. You would not want to be selling your stocks and bonds in order to pay for your bills, as these assets in 2020 lost 30% or more in value in a span of just a few weeks. So you'd be wise to already have an emergency cash fund on the side just in case life happens. And trust me, life always happens when you least expect it. I had a tendency to always invest my emergency cash into stocks, thinking, well, what are the chances of an emergency actually hitting me in the next 3 to 6 months? And so I put my money into Apple stock because I thought, well, Apple stock is safe. It's one of the largest companies. They're not going to go anywhere anytime soon. And so what happened is that shortly after I did that, Apple lost about 5 to 10%. And after that happened, my heater broke down. And so I was forced to sell my Apple stock at lower prices to fix my heater. It took me a few times to learn my lessons, but I did learn my lesson. Don't invest your emergency cash into stocks. In the short term, stocks can be very volatile. All right, so who invests in cash? Who holds cash? Or should I say, who should be holding cash? So people hold cash when they know they're going to purchase something very quickly, like when you need to, buy groceries or pay your bills at the end of the month, or you're going to buy a house in 3 months. These are appropriate reasons to hold large amounts of cash. Pros and cons of cash. So what are the pros and the cons of cash? Well, a pro of cash is that it's very liquid, meaning that you have instant access to spend it how you want. You can't buy groceries with stock or a bond. You can't, can't go and buy a car with a bar of gold, right? It's not very liquid. You also, you can't just say, "Oh, I have equity in my home. Let me go buy a car." No, you have to go do paperwork and all that to get the cash from the equity in your home. So, cash is the fastest way to make transactions. Another pro is that cash in a bank account is protected by FDIC insurance. So, if your bank is a member of the FDIC program, the bank goes out of business, the FDIC, in theory, will pay you back the money that that bank held for you. Check the FDIC website to see what the limits are on FDIC insurance, because those can change. But typically they're around 250,000 per person, something like that. Also depends on what kind of accounts you hold and all that. So just make sure you go to their website. Always look up the latest numbers. The cons of cash is that it's just sitting there doing nothing for you. It's not working. It's not paying dividends or interest. It's just there. And that con leads me to talking about the risks of too much cash. So, have you ever heard the saying, cash is king? It couldn't be further from the truth, in my opinion. I like the saying, cash is trash. While there's no risk that your $100 in the bank account will suddenly turn into $70 overnight, there is the risk of having too much cash and not putting it to work. The risk is that prices of everything keep rising, but your $100 doesn't rise along with it. So remember that inflation averages 3% in the long term. So technically, your cash is losing 3% of the purchasing power on average every single year. So you lost even more during the high inflation period of 2021 and 2022. That medicine that used to cost $50, it now costs $75. Or you used to spend $200 per week at the grocery store, suddenly now you're paying $300 per week or even more. For the same items, mind you. So the risk is that the value of everything is going to go up while your cash is staying the same. You ever hear stories about your grandparents, how, bread would cost 25 cents and now it costs close to $5 per loaf? This is a real life example of inflation. Countries like Argentina and Venezuela have experienced huge amounts of inflation that causes prices to rise by a lot and very fast. In those countries, inflation can range from hundreds or to even thousands of percent. Never think it can't happen in your country. All it takes is some key policy errors or excessive money printing to start something bad. Another example of cash losing lots of value was in post-World War I Germany in the 1930s. Quick history lesson here. Germany had lost the war and their economy was struggling because of it. Germany had lost the war and their economy was struggling badly because of it. Inflation got so bad in those days that one wheelbarrow full of cash could not even buy you one loaf of bread. People would actually dump the cash in the wheelbarrow and steal the wheelbarrow. It wasn't worth anything. Obviously, this led to the rise of Hitler, and the rest is history. The value of cash is based on what your government tells you it's worth. So after all, a $20 bill is worth $20 only because the government tells us what it's worth, right? It's only because the government's telling us that that's what it's worth. And we trust our government. We have trust and confidence that it will continue to be worth $20 into the future. But what happens when that confidence is broken? Like I said, in the United States and around the world, confidence in the dollar is strong. It is said that in Argentina, as soon as the workers get paid, they turn around and go buy American dollars as soon as possible. Over there, the US dollar is seen as some kind of investment, like a hedge. Obviously, confidence in the Argentinian peso is very low. The point here is that cash seems safe depending on your point of view. So with the cash you need to pay your bills, that's okay to leave it as cash. However, how can you put your emergency money to work? So in the next video, let's talk about some short-term investments for your cash.